Hello traders, welcome to another episode of the J Brand. Mastering market structure is definitely the blueprint for consistent profit. Accurately identifying and mapping the market structure along with its crucial elements is the initial key step every trader must take on their trading journey for success and profitability. One of the primary reasons many traders face unnecessary losses, yes, I call it unnecessary losses, is their failure to properly identify and understand the market structure. Therefore, in this episode, I will be explaining both the basic and advanced concepts of market structure, which is very, very essential for every trader to understand and apply in their trading journey. So be sure to watch the entire video until the end. So traders, if this is something you are interested in, please give this video a thumbs up and don't forget to subscribe to this channel if you are new, and also turn on your notification bell for subsequent content or subsequent advanced trading videos. See you guys after the intro. Alright, welcome back guys. Now let's head straight to the point. Market structure is an important concept for you to become, profitable, and also gives you this confidence whenever you are taking a trade. It is the bedrock of any successful strategy. You cannot tell me that you have a strategy that is void of market structure. Market structure simply tells the story or gives you the direction of the market. So how do you become profitable, or how do you win a trade when you don't understand, or when you cannot predict the direction of the market? At least you should be able to predict the direction of the market. So checking or looking at this diagram on my screen, you can see that we have three types of market structures, which I am going to take my time to explain, in this video. And I want to assure you guys that any content I drop is really a banger, because I'm focusing on the advanced trading concept. This is what really works. Shun those stories out there, shun the paparazzi. Don't pay attention to what really works in them. This is how I trade. This is ever since I started, or ever since I got a proper understanding of market structure, it has actually changed the trading game for me. So, and that's why I feel the need to also share with others, so that they can help, so that you can upgrade your trading game. Now we have three kinds of market structure. We have the swing structure, and you can see in brackets, very important. And then we have the substructure, and we have the minor structure. Now, without wasting much time, let's dive in. Now we can see this diagram. Okay, first and foremost, there are two kinds of markets, not market structure this time, but two kinds of markets. Okay, we have the trending markets, and then we have the ranging markets, or you call it the consolidation markets, or markets that is consolidating. Now, the trending market is what this diagram depicts. You can see a higher low and a higher high. This is a buy, this is the buy model. A higher low, another higher high, a higher low, a higher high, higher low, and a higher high. Now, whenever price takes out the previous higher high, it is termed a break of structure. Short form BOS. So whenever price takes out the previous higher high in an uptrend, it is termed a break of structure. Okay, so and so on, like that. Now, if you look at this, this low becomes my higher low. This is my higher low, okay, and this is my higher high, higher low, higher high, and just like that. Now let me explain for the bearish trend. This is the bullish trend, this is the bearish trend. Now we can see a lower high, and then we have a lower low, okay, and whenever in a downtrend, whenever price takes off the current or the previous lower low, it is termed a break of structure. That is a break of structure to the downside. A break of structure to the downside. Whenever price takes out the current lower low, it is termed a break of structure. Then we see another lower high and a lower low, so this is automatically a break of structure to the downside. And then we see another lower high and a lower low. This is another break of structure. So this is everything that the trending market looks like. This is a buy trend, this is a buy trend, and then this is a sell trend, or you call it a bearish trend. Now I think, okay, I have another example of a ranging market or a consolidating market. This is a very good example of a consolidating market. You can see price heading to a resistance, coming back to the same support, another resistance, coming back to support without breaking any structure. So in this kind of market condition, you don't want to be seen, you don't have any business trading in this kind of market condition. You always want to avoid trading in this kind of market condition, because it is not telling any story. It is only showing you that buyers and sellers are actually struggling. Okay, there is no trading momentum, nothing is actually moving the price, so you have to avoid trading this kind of market. Now heading to the second phase, like I said, we have three kinds of structure. Now three types of market structure rather. Now if we take a look at this higher low to this higher high, this is called our swing structure. This first higher low to this higher high is called our swing structure. Therefore, the first lower low is known as the protected area. So if you are able to map out your market structure correctly, price is not supposed to come below this your protected area in an uptrend. Now take a look at this other one. Price, if you see price retracing, this is called, no, let me explain it properly. Let me explain it properly using another diagram. Now we are treating the swing structure. Now this is what a swing structure looks like. I said it before that when price takes off our previous high, this is termed a break of structure. Please take note of that. This is called a break of structure. It's like this thing is too. Okay, this is called a break of structure. Now this entire story or this entire picture is called the swing structure. Okay, from this low, from this higher low to this higher high is called the swing structure. So automatically the higher low of a swing structure becomes the protected area, while the higher high of a swing structure becomes your target area. This becomes your protected area, while this becomes your target area. When you are taking a trade, having identified or understood the swing structure, your stop loss should always be below the protected area for an uptrend, and then you get to target the higher high, which is the target area, as your take profit. So this is everything to know about the swing structure. Now secondly, we have the substructure. Now there is a formula that states that whenever there is a break of the previous high, which is called the break of structure, the market must experience what is known as correction phase. That is, the market must, the market must, correct itself. Price must come back into an area called the discount area. Now this correction phase is what is known as the substructure. Price must retrace back into the discount area of the swing structure. So the process of the retracement is what is known as the substructure. That is why as a trader you have to understand that patience is a virtue. You need to develop the habit to always wait for a proper retracement. So this retracement process is called the substructure. And now the first swing structure is telling us a very beautiful story that this market is an uptrend because it has broken above the previous high, which has given us a break of structure. And therefore when price gets to this discount, automatically price is supposed to create a continuation. This continuation is called the minor structure. Price is supposed to continue to the upside to take out this previous higher high. Then this previous higher high automatically becomes another break of structure. I hope we are getting it. This previous high automatically becomes another break of structure. And what happens if this previous high has been taken out? This becomes the new higher low, which becomes your protected area. That is, if you are trading, before you take a trade, ensure that you understand that this is your protected area and price is not supposed to come below this protected area. And automatically price has given us a new swing structure. You can see the circle. Price has given us a new swing structure. Therefore you are expecting price to give you another substructure, because when there is a break of a previous high for an uptrend, there must be a correction. There must be a correction back into the discount zone of that swing structure, which is this, and automatically there must be a continuation, which is called the minor structure. So having given this example, I want to believe that we have understood what a swing structure is, a substructure, another swing structure, this is the minor structure, another substructure, minor structure, and so on. So as we progress into this video, I believe you're going to have a better understanding. Now, this is this for the uptrend, and it is also applicable for the downtrend as well. For the downtrend, you want to have this as your swing structure. For the downtrend, you want to have this as your swing structure. And I said it before that when price takes out, I don't want this video to be too long. When price takes out the previous lower low of a downtrend, automatically this becomes your break of structure. This becomes your break of structure to the downside, and this becomes your protected high. So in a downtrend, price is not supposed to go above this high. This high becomes your protected high. See guys, if you understand this concept, it will really save you from taking unnecessary losses. You will have a better understanding of where your stop loss is supposed to be and where your take profit is supposed to be. Now, when you see a swing structure like this, the next thing you should be expecting is a substructure, which is known as the retracement. You want to see price, coming into the premium area. It is known as the premium area because this is a sell model. Okay, this is a downtrend. So, when you are selling, you must always sell at premium. I will come to this. I will explain that as we move forward. You must always sell at premium and buy at discount. So you have to patiently wait for price to come to the premium area, okay, and then you sell from here. You sell from the premium area. This is your minor structure to the downside. So let us take some practical examples. Okay, another thing I have to, this is just the basic concepts of market structure. However, this is not enough. This is more or less like the textbook format. In the actual trading sense, in the real life trading experience, you don't always get it like this. It doesn't really always happen like this. See what you should always be looking out for while trading. Okay, there is a sweep that should validate your swing structure. A sweep must validate your swing structure. So to become very profitable or consistently profitable, this is what you should be looking out for. Now, for an uptrend, you want to see something like this. You want to see a break of this. So you want to see something like this. Hold on. And then a sweep of the previous low or the low or the higher low, and then a break of the previous higher high. This is what you want to see in the real life trading scenario. So this is the sweep of your previous higher low, which validates this swing structure. And then this is the break of your previous higher high, which is also known as the break of structure. Please excuse me guys, this thing is very, very easy to understand. This is more or less like the advanced market structure. This is just the basic. Okay, you can actually look out for this on higher time frames like the weekly or the daily time frames. But before you pull the trigger or before you take any trade, ensure that you have this kind of swing structure. You always want to see a sweep and a break of the previous higher high, and automatically then you can now be free to call this area your protected area and this area your target area. I hope I am communicating. So this sweep validates this entire swing structure. And what do you want to see after now? You want to see price or market selling from the premium area back into this discount area, and then mitigate an area of value here, and boom, back to the upside. That is taking out this previous higher high. This is what you always want to look out for. For a downtrend, the same thing. You always want to look out for a sweep of the previous high, which is this, and then a break of the lower low, the previous lower low. This becomes your swing structure for a downtrend or a bearish market. This is your sweep, and then this is your break of structure to the downside. This is your break of structure to the downside. Automatically, this becomes your protected high. Price is not supposed to come above this high, and then this becomes your target. So this is your swing structure. Therefore, you are looking at taking trades from inside this area. You are selling from here and probably buying into the premium area. Like for me, when I've marked out my swing structure on the higher time frame, you can scale down to the lower time frame to look for buy opportunities. Look for buy opportunities into the premium area. And when price reaches the premium area, you stop buying and then you start looking for sell opportunities, because price is definitely going to come back to break this previous lower low, which is your target for a downtrend. So guys, this is how the market works in a real life scenario. This is what you should always expect. Now, one last thing before we go into the charts to figure out some examples. Now, you have to understand how to apply your Fib tool, your Fibonacci tool, to validate your point of interest or your area, or the area where you are interested in taking your trades from. Now, when we have another swing structure, I said for a valid swing structure, you need to see a sweep and then a break of structure, right? Yes. So this becomes your sweep, and then this becomes your break of structure. This becomes your break of structure. So automatically this becomes your protected area, and then this becomes your target area. Hold on. This becomes your target area. Now, what are we expecting? Price has already told us the story that, oh, hey guys, listen up, I'm going up. So we are after price has taken out this previous high, you should expect price to retrace back inside this range and mitigate a fresh POI that will trigger price to move upward or continue its trend. Now we have to understand that because this is just an uptrend, you cannot just buy from any area, and that is where the Fib tool becomes useful. Now you take your Fibonacci tool. This is just what I do with my Fibonacci tool. From the higher low to the higher high. From this higher low to this higher high. This is how to actually plot your Fib tool for an entire swing structure. Now, This area becomes your premium area. Becomes your premium area. Why? Excuse me, hold on for a minute. Okay, sorry for the break. Why this area becomes your discount area? So this area is your premium area, and then this area is your discount area. You, in a buy trend, you are never going to look for buy opportunities around this area. The only area you should look for buy opportunities is this discount area. Okay, this is the only area where you have to look for buy opportunities. You can only look for sell opportunities into the discount for an uptrend. Okay, this same principle is applicable for the sell model as well. So let me take this off and take it again. Hold on. So like I said, this principle is also applicable for a bearish market. This is your sweep. This is your protected area. Now automatically this becomes your target. This video is getting too long. So guys, this is your break of structure. Now to use the fib tool or to validate your swing structure where you should actually buy and sell from, take your fib tool, plot it from the higher low to the higher high. Sell around this area. Always make sure you are looking for sell opportunities around this area. Okay, and look for buy opportunities around this area. You can look for your buy opportunities around this area. So this area is known as your premium. Why this area is known as your discount area? So you always want to buy from you always want to sell from your premium area and buy from your discount area. Now, there is another important lesson you need to learn. When price has actually gotten into your discount area, move your fib tool from the higher high of the swing structure, take it to the break of structure, where the break of structure is, that where the break of the previous high. Okay, move your fib tool to this break of structure just to help you determine the best place. Even in your discount area, you need to know the best area to buy from. So this gives you a better understanding of where to actually buy from. Now in my next video, I'm going to be teaching on liquidity, everything you need to know about liquidity. Okay, so when price starts trending downward, which is this substructure, and price gets to this area, after you have plotted your fib tool from the higher low to that current break of structure, everything that happens here is liquidity. Everything that happens in this area is liquidity. You are not interested in taking any trade here. Sometimes you can see that price will get to this point and price goes back to take off the previous higher high. Don't get trapped by this move thinking that this becomes your new protected area. No, because this is just seen as inducement. Okay, price is definitely going to come back, okay, into these discounts to take off that inducement and then continue to the upside. You just have to understand this. Okay, in my next video I am going to be teaching everything you need to know about liquidity. So give this video a thumbs up if you have gained value so far. Okay, and don't forget to turn on your notification bell after subscribing so that you get notified whenever I drop, subsequent advanced trading videos. Okay, so anything that happens in this area is known as liquidity. That is, if you have plotted your fib tool from the higher low to this break of structure, anything happening here is liquidity. You should always make sure that you are taking your trade or your trades from this area that is in an uptrend. This same explanation is applicable to the sell or the bearish market, which is the sell trend, the downtrend rather. Okay, I just hope you guys are understanding what I'm trying to explain. So let's move. Let me show you guys some stats example, and then we just come to an end for this video. Okay, now there is a trade I took on Euro USD a couple of weeks ago. Please pay attention. This is the chart example, and let's see if what I have explained so far is applicable in the real life market scenario. Now this is it. Are we seeing this swing structure? I said for your swing structure to be valid, it needs to have a sweep. So look at it. This is my sweep. This is my sweep. And then this, okay, sorry, this is my sweep. This actually took off or swept this previous low and then went back up to take out this previous high. Now this previous high automatically becomes my break of structure. This previous high automatically becomes my break of structure. And what did I tell you guys about the substructure? For the substructure, price must always, for the substructure, price must always find its way down into the discount area of your swing structure before you get a buy opportunity. So it's very, very simple. If you understand this concept, it's very, very simple. And then using your fib tool, this is the entire swing structure, like I said. Now you don't want to buy from this area because this area is premium area. You only want to buy from the discount area. Now when price has gotten to your discount, or when price has gotten to equilibrium, which is this yellow line, when price passes this yellow line, take your fib tool back to this break of structure, this previous high that was broken. Okay, just so that you don't get trapped, you don't confuse, because when this fib tool is still around this area, or when this fib tool is still around your higher high and price comes into an area like this area, you might really not understand. You might be thinking that you are still trading from a discount area. Yes, you are trading from a discount area, but this will cause you to have a lot of stop loss, like a higher stop loss, which is really not necessary. So what you want to do is to move your fib tool back to the break of structure and ensure that you are only buying from this area. anything that happens around here is liquidity. You are not interested in taking trades around here. So you can see my trade. I took it here. I took my trade from this area, which is the discount. There's an area of value here, a POI, a breaker block if you move to the 1 hour time frame. But I just want to rush up so that we can end this session. Okay, I'm going to be dropping subsequent trading, advanced trading videos to help you level up your trading game. Now, there's an area of value here which price mitigated, and you see, boom, moved to the upside, continued to the upside, because this swing structure has already told me that price is heading upward. You understand? So everything that is happening, you can see here, everything that is happening here is liquidity. I'm not interested in taking my trade here. I want to see price taking off or takes off all these lows, and then before I enter the market. So this is a very simple concept to understand. This is pretty simple to get to understand when you do enough back testing. So just do your homework, back test, and make sure you understand swing structure properly. And then if you want me to, if there's anything you are not getting, you feel free to drop it in the comment section. There are no stupid questions. Ask questions and I'll take my time to explain, so that you can understand better. And now look at, I'm seeing another swing structure. Around this area. That is my sweep. I said it before that for your swing structure to be validated, it needs to have a sweep. So automatically for this low, for this uptrend, this becomes my protected low. You can see my stop loss. My stop loss is always slightly below or above my protected low. The stop loss should always be slightly below or above your protected low. This is your invalidation area. When price takes off this low, that means the trend has changed. Now this becomes my protected high. Okay, and this is my entire swing structure. From this protected high to this, area, or probably to this area. Okay, this is my entire swing structure. And now I am looking to buy. I'm looking to sell at premium and buy at discount. I bought at discount here, so if I'm selling now, I have to make sure I'm selling from this area. And if you look at what price did, if you look at what price did, now when you take your fib tool, you see, plot it this way from the higher high. Sorry, this, if this is a low, if this is a downtrend, from the lower high to the lower low. Okay, so you have the leverage to sell from this discount into the premium. Okay, from this discount into the premium. So you can just take a short sale. Like now when you take your fib tool, plotting it from this area, plotting it from this area to the break of structure, to the recent break of this low, you can see everything that is happening here. You can feel free to trade from this area. You see what price did? Price mitigated this. If you go to the higher time frame, you'll probably see an order block, which is this. Look at it. This is a primary auxiliary order block that was mitigated, and that actually brought price downward. So if you trade like me, probably taking 1 to 2 RR or 1 to 3 RR, you should be in for a lot of profits if you take this trade. Probably, yes, your invalidation area should be where you stop. You see where I put my stop loss, or where I am putting my stop loss, because I know that this zone is protected and price is not supposed to take out this the higher low, the lower high rather. See, and then you can target around this area. You can have 1 to 2 RR. Okay, so that is that for these examples. Okay, please give this video a thumbs up if you are gaining value, or if you've gained value so far. Okay, give this video a thumbs up. Let me look for another opportunity. And don't forget to subscribe to this channel if you are new. There was a trade I took on GBP JPY. The same thing is applicable everywhere, in all markets, crypto markets. Even when you are trading your synthetic indices, ensure that you are big on market structure. Have a good understanding of market structure. Now look at my swing structure here. Take a look at my swing structure. You can see price had to take out this low and then break structure to the upside. Now this becomes my sweep. This becomes my sweep, and this becomes my protected low. This is now my protected low, and you can see my stop loss slightly below my protected low. That is to say, price is not supposed to take out this low, because it has confirmed to us that it is heading upward. It took out this major high, okay, and made this place a break of structure. Made this place a break of structure. Now this is going to be your target. This is your swing low, which is known as your protected area. Okay, and now you want to take your fib tool. You want to take your fib tool, plot it from this area, from the higher low to the higher high. Everything that is happening here, you are not interested. You are only interested in taking your trade from this discount area. Now when price has gotten into your equilibrium, take your fib tool again, remove it from the higher high, take it to the current break of structure, and you always want to take your, you will look for an area of value, or you call it your POI, a point of interest around this discount area that has not been mitigated. Now in this case, I made use of my QMR. I'm going to be doing, I'm going to be doing subsequent videos on POIs and liquidity. So do well to subscribe to this channel and turn on your notification bell for further updates. So guys, let's not continue, because I think this video is now becoming too long. So that will be all for now, guys.